Hello traders, the title of the video is how have they traded that oversold CCI trading signal. Alright, so you may say, Joe, you have been talking about oversold CCI for some time now. Okay, what's going on? It's more about, specializing, focusing, mastering, becoming an expert CCI trader. So we have an oversold CCI period 14 here. How have they traded that oversold CCI trading signal precisely? I'm on the monthly chart. The financial instrument is Silane Incorporated Epic XYL. All right. So look at this. CCI was reaches the oversold zone. Okay, right here. Well, how have they traded that? Okay, so I want to show you so you may understand that. What they have done here, you can see that the price breaks below. You see here this candlestick bar from the top of the pitchfork tool. So we come by this point. 3 point we need to draw the pitchfork tool. We had that green pitchfork tool. So as the price finds support near the median line, it bounces on the edge of the pitchfork tool, breaks below the median line of the pitchfork tool. Two things the price doing all the time: either the price will break above, retest, or break below, retest. So in this case, the price breaks below the median line and then it retests in that candlestick bar is closed. Now the first intention is to sell. So they sold it. They receive a signal to sell. They use a different trading method to sell it, and they sold it down. Where is the target? The edge of the lower part of the pitchfork tool. So everything worked well as intended. So they sold it right there. Now, as the price reaches the edge of the pitchfork tool, you see that the CCI became oversold, pointed to us a support level. Which support level? The lower end of the pitchfork tool. Trader acknowledge it. But if you look carefully on this monthly chart, this candlestick bar got a tail. You see this one got a tail. So how do they handle that? What they have done here, there are two methods that they can use. What they have done here, you can see the tail. I'm going to apply Fibonacci retracement to the tail of that candlestick bar, just to the tail. Well, you see the tail? Because the tail is representing a support zone. And then what they have done, they want a pullback near which level? The 50% Fibonacci retracement. Have I done it correctly? Hold on, please. Okay, doesn't matter. All right, the 50% Fibonacci retracement is this one here. Of that tail, right there. So, they want to buy, they want a pullback, yes or no? So it's strange, isn't it? They want to buy, but they want the price to go down first. Generally, a lot of traders will be those who also know that the price will go up, will quickly buy without timing the market correctly, and they'll be taken out first as the price tries to. So you see the following mount, okay, as see it did close here, you see here, so there is a gap between the closing level. Am I talking to myself? So that candlestick bar did close there. You see the horizontal line did close there, but this one did open here. So there is a gap there. You see, there's a gap. All right. They want it to go down a little bit more because this one got a long tail. So those traders knew that it's better to buy near the edge. Right? But this one actually reaches this level. There were some smart traders that already entered the trade during that month before this candlestick bar is closed. Probably they were on the daily charts, all right, and they push it up. So after this candlestick bar is closed, other traders also want to join them and buy, looking for signal to buy, but they say, well, we can't buy in that point there. We will prefer to come a little bit down more so we can place our stop loss here. Can you afford that stop loss? Now, this is why I do not tell traders where they should place their stop loss. So the best place to place it behind this stop loss. Other traders may place it just a little bit there. What can you afford? That's it. All right, so here, that's why he pulled back there. After the price pulled back to retest that median line, you see how it touches it exactly. You see that median line of just the tail. All right. Now, so because the whole idea is to buy at the best place. That's it. Where they can hide the stop loss at the best place is near the edge right there. Did you see it? All right. Not only that, all right. Look carefully, my friends. You see, this was a prior high, yes or no? This was a prior high. If I put a horizontal line there, and then we put it here, this is a prior high here, right there. So some trader will even prefer it to come down all the way to retest this prior high, but it couldn't. So if we dip below the lower edge of the P42, the next level that they will prefer to buy is near this high here, prior high here. Now, if you miss that opportunity to enter there, other traders who could not enter right there will have done something different, which means they will apply Fibonacci retracement to the whole range of that candlestick bar. But in this case, it's tricky because this candlestick bar does not have, it's a long candlestick bar, whatever. Okay, let's not dwell on it. Okay, so they will prefer to buy nearly 50% Fibonacci retracement of the range of that candlestick bar. Another way to handle that, if those are the points they are watching, so you want to buy, where are you willing to buy? Where is the best place to buy? Where do you look? So other traders may apply it just to the body of that candlestick bar. So they will be placing, looking for an opportunity to buy, again, near this 50% Fibonacci retracement applied to this body of that candlestick bar. So though we are talking about the oversold CCI, after the CCI has pointed to that support level, we highlight it. We support the edge of the P42. Now we want to buy. We have a problem. We need to buy in a place where we can be secure, which means that we want to place our stop loss in a way that we are not taken out of the trade. Now, talking about stop loss is relative to each trader. A trader may say, I can afford 40p for this trade. I don't want to use more than 50p for this trade. Another trader may say, I will only use 80p for this trade. Another may say, oh, I will use 100 pips. Another may say, that's not for me, and so on. Right? So everybody knows that in this scenario, the concern is that will the price come back here? That would be a better place to look for an opportunity to buy. But if it couldn't come near that place, where is the next level that we can buy? Okay, is this one here, you see? All right? And if that one also fell, that would be the median line of the range of the whole candlestick bar. If we couldn't buy there, the next level is this one here. It's going on all the time. So the movement that has started here, price was going down, supposed to come down straight here. As it reaches the median line, it pushed back, bounced up to retest the top, break below, retest, went back above the median line, they slowed it down here. Now this one betrayed the activity here, the tail here is betraying what's going on. Okay, the price was confined within the boundary of the P42, indicating to us that we should give priority to bullish signal at the best place. I can go on and on and on and on and on. All right, you want to know more? Apply Fibonacci retracement to the last move. You see here, so he pulled back here. You see here, and he went up all the way here. Okay, from here to here. Yes or no? Where is the 50% Fibonacci retracement level of that move? Look, this line. The thick one here, same level, same level. So that move from here to here, the 50% Fibonacci retracement level is this one here. So where traders were buying, okay, the zone. In fact, the Fibonacci retracement I should have drawn it like this. Okay, here it is. All right, 50% Fibonacci retracement. They were buying in a sweet exposed zone of the prior move, which is also that, you see that a thick line was the 50% Fibonacci retracement applied to the tail of that Tennessee bar, but it's also coinciding with the 50% Fibonacci retracement of the move from here to here. And try, you can see that tail was to retest the sweet spot zone, which is the zone between the 50% and the 61.8% Fibonacci retracement level of this move up. So the CCI period 14 was oversold on the edge or the median of the pitchfork tool, which is also corresponding to the 61.8% Fibonacci retracement level. You see that level, 61.8% level, is corresponding to the edge of it. So the price pulled back to return the 61.8% Fibonacci retracement level of the move from here to here at the time when the CCI was retesting, the oversold zone. There were some buyers here. So Fibonacci trader want to buy in the sweet spot zone after a bullish move. We have 1, 2, 3 minimum price move is 3, right? Coming into the sweet spot zone. All right. Now, all we need to do, that's what we are talking about all the time. All the time. We are talking about the same thing all the time. Different time frame trading method. So you can YouTube search the phrase mastering. Different time frame trading method. Mastering top-down trading method by 2-4 stock trader. Don't watch it anywhere else. You can quote me anywhere. You can quote me on Twitter or Facebook, all right? So the problem, the challenge for trading is the market timing. So I will be recording a video about what is more important. Is it the entry or the exit? What is more important? Let me know in the comment section. Another question, all right? I will be also recording a video about why I do not tell traders how they play their stop loss. So I will tell you about myself, how there's already a video about how I set my stop loss at a 2-4 stock trader. You can YouTube search it, how I set my stop loss like a pro at 2-4 stock trader. I talk about how I set my stop loss. And now I will be recording another video when we will be talking about, why I do not tell traders where they should play their stop loss. So you see here, a lot of traders will play their stop loss in a different way. But the best place is to place it below the sweet spot zone or below the edge of the pitchfork tool. But can you afford that? Suppose I say to you, put a 10p below that. Can you afford that? No. A lot of traders could not afford that. Now, what is the reasonable stop loss for this financial instrument? All right. How do you control the risk? Do you use the same stop loss for every swing trade? Do you use the same stop loss for everyday trade? Do you pay attention to the characteristic of the financial instrument that you are trading and you are adjusting it accordingly? So we may say the best way to play this stop loss, it will be 10p below this low. But for instance, if the financial instrument is more volatile, we may say to trader, well, don't put it there because this financial instrument is very volatile. It's better to put it, 50 pip below that level. And another trader may say, Joe, you are completely crazy. You see, so to avoid long story, we'll stop here. So if you have any question, suggestion, complaint, lament, please let us know in the comment section. And of course, I will be recording another video to answer your specific question. What we are doing now is that we are looking at the different CCI trading signal overbought, oversold, and relating to a specific financial instrument. And we're going to go through a discussion looking at it from different angles to help traders that are very, very interested in mastering the CCI indicator in a practical fashion. All right, but you want to use the CCI indicator or the commodity channel index indicator in conjunction with the top-down trading method. We can combine the CCI, we can see now, with the Fibonacci sweet spot zone, Fibonacci retracement, and also with pitchfork tool. To learn more about CCI trading or commodity channel trading, go to www.dayprotraders.com. Subscribe to our YouTube channel. Our YouTube channel is Day Pro Traders. Be sure to click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself, and be very happy. We are the TSTW24 traders talking about how have they traded that Oversold CCI trading signal precisely. Thank you for watching, and I will speak to you soon. Happy trading to you all.